Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is going to be a chart of the market. We're looking at the E-mini S&P 500 futures contract with the last print of 10/22 on this Friday, the second day of October 2009. What a banner day it was yesterday. I'm sure most of your all's portfolios overall, certainly that are invested in for the long term, lost money yesterday, but certainly as we are, a hedging vehicle primarily, essentially 10 to 20% of your portfolio will go to what we do, which is risk speculation and to leverage your returns to actually take advantage of when the market is going lower, like it was today, or sorry, yesterday. And we had a continuation move actually this morning as well, kind of hovering around the low of the prior day, around 1020. We've got some very strong resistance on the daily chart. But as you can see, today's Friday, Thursday, Wednesday, Tuesday, Monday. Things are going along pretty well Monday. As you can see, we had a lot of green right there, had some accelerating green. These are our proprietary indicators, what we term our intraday dynamics, how we view the market, where it's likely to go. And as you can see, we did have a lot of green. Once we get the green in the bars, that's pretty good evidence that the market will continue and has some momentum behind it. And then we have the underpinnings suggesting full bullishness as well on this Monday. But on the Tuesday, you could really see that everything just started to fall apart. We had this errant surge higher and a complete sell-off, arguably an ET sell signal and an intraday basis, if you will. And we had some extreme divergences. No bullishness here, relatively speaking. No bullishness here, decelerating the level that we did have, and certainly bearishness here. And so as you can see, the price also was just flatlining around the trend, just a really good indication that the market was not going to be able to go any higher. We did get a little bit of acceleration here late in the day, but the picture was just too bleak for the market to move higher, and we did get the resultant sell-off on Wednesday. Early session Wednesday, a very marked sell-off as the quarter came to an end, had some extreme positional jostling, if you will, and some errant and wild moves. They really took advantage of this opportunity to buy that, but just really was an errant move. As you can see, by the end of the day, we're back below the trend and triple threat bearishness with a little bit of bullishness there. Really just the market was in trouble. Ergo, we have Thursday, as you can see, red bars as well, so just bearishness all over the place, below the trend, opened lower, broke below this low, bearish, 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 bearish. What do you get? The resultant trend lower to the downside, a continuation move here today. We are below the trend, nice little selling opportunity from a discretionary basis around the underside of the trend, 1026, given the bearish state. But as you can see, full bearishness is the case right here. A little bit of divergence, but not really much to put our finger to. Having said that, that's a look at the intraday. Around 1020 in the market, if you look at the daily, we'll pull that up right here. We'll take a look at the daily cash index on the S&P. And as you can see, this is our favorite measure of trend following support resistance. That's why it's blue. And as you can see, a very strong level of support resistance, both from a horizontal perspective at this swing high, 1020, and errant break below, reclamation, continuation, a move back down here. Of course, this overall looks pretty bearish as we have a lower high, lower shoulder on a potential head and shoulders formation. So we're going to get a bounce here. Definitely looks like we're going to get a bounce here, but overall the picture from a discretionary perspective looks to be relatively bearish on a sell around 1050 for a continuation move to around 1000 and the resultant I should say the obligatory sell-off in the fall that we usually get around September, October. Of course, we're now into October, getting a little bit of a sell-off, a little bit of a precursor there. But as you can see, we're back below this. But this swing high right here, very strong resistance or support, I should say, was resistance, and in concert with the trend around 1020 as well. And our key measure of trend following support resistance in the blue line right there really suggests that the market is likely to bounce, and that's why you're seeing this little hold right here. Do we expect a big sell-off today? Probably not. This, of course, is Friday. If you look at from an official market timing perspective, however, we do remain fully bullish, and we'll do, for our intents and purposes, above this 1020 level. Below 1020, probably going to move to neutral. If we get below 970, we'll call it certainly this high right here. We'll call it, actually 960 was our fulcrum. That was our pivot. 960. If we certainly get below 960, we're actually going to move to neutral, but we'll move back to a sell in all likelihood from an official market timing basis, given that short-term bearishness is the case in terms of momentum. Intermediate term is coming to the likely to come bearish as well. And from a directional movement perspective, short-term bearish has come to the fore as well, and amidst an intermediate term neutral standpoint. But enough of this. So that's where the market is. How have our portfolios been doing? Well, as you can see, just take a look at this. Wow, yesterday we really capitalized handsomely, and our average return for our futures portfolios was $4,600, primary portfolios $4,634.50, or 17.2%. The MapDT version 4.0 HR, again, a very popular portfolio, just really hits that the sweet spot of what our clients are looking for, which is high risk to high reward. Of course, the HR is high risk and high reward. That's the vernacular, but nevertheless, really just suits our clients well. It's a very popular portfolio. As you can see, yesterday, up $7,460 on a $25,000 portfolio. 30%. The actual leader for yesterday was a combination of our dual day trader DS and our dual day trader ES portfolios, both of which gained handsomely yesterday in the 20%. Dual day trader DS almost gaining 30%. But a combination of these two portfolios yielded, again, it's an HR portfolio, but yielded an astounding 33.5%, or $3,500 on a $10,000 portfolio. So definitely was a banner day yesterday. If we look over at how we've been doing over the last 14 days, the MapDT version 4.8 HR up 38% over the last 14 days. We expect October to be a really banner month, particularly relative to the market, to the cash market, the S&P 500 benchmark. Expect October to be a banner month. The market will likely be lower. Our portfolios will very likely be higher. The dual day trader ES and the dual day trader ES20 are leading the pack, as has been the case for most of the year. And of course, the MapDT version 4.0 is highly centralized, concentrated, I should say, with the dual day trader ES portfolio. It's up an astounding 64.25% over the last 14 days. Over the last 31 days, 87%. It's still the leader, dual day trader ES. We weren't tracking this on a daily basis then. Over the last 58 days, 135% for the dual day trader ES. You can, of course, participate in as many of these as you would prefer. And here's how we were yesterday. We just looked at that. And right there, the MapDT version 4.0 HR up 74.60. So if you're interested in these portfolios, what you can do is subscribe, receive your welcome letter in the email. The broker handle's all set up. All you do is open the account, quick online application. Broker handles the account, and you'll be up and running. Broker handles all execution, oversight of the account management. Takes care of everything for you. All you have to do is get the ball rolling, is to subscribe, pick your portfolio, go to the website, and you can look at all the returns right there on the home page, or go to the 2009 returns page right there. If you're interested in the MapDT version 4.0 HR or the THR portfolio, all you have to do is click there and get a little special. For that, if you add to cart, TTTHR is $1,500. That's a special for 3 months already. And you can add that cart. Of course, it made over twice that yesterday alone. Enter promo code SAVE, hit apply, and you can save a $225 on that portfolio for the quarter. And that, of course, that savings will continue for every quarter that you're billed. And you can also save. We'll delete this one. $375 off the MapDT version 4.0 HR. We hope you enjoyed it. Go to the website, chat with the support team live if you have any questions, and we will see you next time.